People in here have a C corporation as a business? Right. Okay, and that's about right. Statistics-wise, there's not a lot of us that are operating. They're great entities for certain businesses. We don't set up a lot of them, but when the opportunity arises, they're a great choice. But from an operations standpoint, usually the flow-through companies are the ones that we'll see most of you in. Now, show of hands. How many of you in here have a flow-through, an LLC or something of that nature? Okay, good. So we're going to be talking a lot about some things for you as well. C corporations, though, be aware. There was a great thing that happened that a lot of you don't realize behind the scenes, but the corporate AMT, which is the alternative minimum tax, it got eliminated completely. And that stuck a few of you if you were in business. So keep that in mind. All right. Disadvantages of C Corp. So before everybody goes running out and changing their flow-through companies to C corporations to take advantage of that lower tax rate, let me just point this out to you, okay? The corporate tax rate is one level of taxes, 21%. But to get the money out of C corporations, you've got to take a dividend. Well, that dividend is also taxable. If you're in a higher tax bracket, you're going to pay 20%. Now, on top of that, there's this thing called the net investment income tax. Now, that's relatively new. It's only been around for a few years. It unfortunately did not get repealed as part of the Tax Act, but it's an additional 3.8% on dividends. So you can see the effective rate that you're going to be paying as a C corporation shareholder, small business shareholder, like most of us in this room, it's probably not the best entity. Okay? All right. The pass-through business deduction. Now this has made some press, but it's really not been explained clearly enough in the papers, and hopefully you're going to get some walk-away things for this today, because this is going to affect most of you. Okay? We're going to go through it in steps, though, and I'm going to ask for a little bit of participation as we go through this as well. But suffice it to say, there's a new 20% deduction that's going to impact various types of businesses that are titled pass-through. Now, what's a pass-through business? A sole proprietorship, partnerships, S corporations, limited liability companies, LLPs. Some of you are going, well, what about my rentals? Rentals apply as well if it's for a trade or business. Okay, so everything is that flows through onto your personal returns from a business standpoint is going to qualify for this type of a deduction. Now, qualified